In today's top 5, you're going to hear about pandemic-proof businesses. Now, you know, COVID-19 seems to be running rampant all over the world again. And we're all concerned whether economies will slow down again. And that's why pandemic-proof businesses may seem more valuable moving forward. And if you agree, you may be thinking, it has to be cloud computing, it has to be e-commerce, those kind of sectors, but not necessarily true. Today, I have two names I'm sure you're familiar of. And with that, let's roll in the intro video. Hi guys, welcome back. Now let's dive on to the first name, which I'm sure you're aware of, which is LVMH. LV stands for Louis Vuitton. Now I haven't bought a bag from Louis Vuitton before, so I've never had that experience. Maybe one day I will. But right now, the fun fact is this guy over here, he owns 49% of LVMH. And right now, he's the world's richest man. Mr. Bernard Arnault has surpassed the wealth of Jeff Bezos and Elon Musk, simply because the share price of his company has skyrocketed. Later, I'll show you a chart of it. Now, we're all quite surprised because we're all thinking technology is the shining light past this pandemic, but not necessarily true. And that's because, you know, there's so much pent-up demand for luxury goods. I guess when you and I, we can't travel, we have this extra budget, right? And we want to pamper our other half with a nice bag and something like that. That's why the money has been now spent from traveling all the way to a luxury bag. So that's a possibility. Now, LV, they'll be doing a fashion show in Singapore. And why Singapore, you may be thinking? I guess it's because, you know, we have crazy rich Asians and we kind of control the pandemic quite well. So maybe suitable to hold this, you know, physical show in a lot of ways, just to showcase their things. But a lot of things that they are doing is also moving digital. This physical show is kind of like a statement in my opinion. And in a lot of ways, LVMH is like no other luxury company. And let me pull up a quote to really show you what some analysts mentioned about them. Right now, LVMH has actually surpassed Nestle, which is a Swiss food giant. I'm sure you have bought before Nestle's products. And the real part is, you know, these brands that they own really have a significant premium. And you know, luxury always has this place and demand among consumers because we have money to spend and we want to find that feeling when we make purchases also. LVMH is also moving their products a bit more eco-friendly, so no problem with ESG requirements. And let me show you a quick snapshot of its various businesses. Wines and spirit, of course, that's the MH portion. Fashion, perfumes, watches, retailing and other activities. So they are quite diversified across brands. And the next part that I'd like to show you to add a flavor to things is this summary over here. What do you realize I'd like to highlight to you? Asia ex-Japan right now is really the key driver of revenue, correct? 34% of revenue. And that's of course from Chinese shoppers. If you're in the tourism sector, you do know that Chinese tourists are among the biggest ticket spenders right now. So right now in China, I'm sure they're retailing the top brands like Dior, like LV, a lot. Even though Chinese tourists are not able to move out, I'm sure they're selling in China itself. Also, I'd like to show you what happened in 2020. Actually, operational performance dropped a little bit. Everything in terms of selling was slowed down simply because probably infrastructure issues. But the main part that I'd like to also highlight to you is while it dropped across the year, the key part that analysts are really getting excited about that you should also focus on is the drop started at the first half, but as of fourth quarter, it really started to recover already. You realize that fourth quarter, the drop has been reduced to -3% and moving forward, it could reach new highs. Now, LVMH's performance has been saved by Louis Vuitton and Dior's rebound. These are two key brands that they own. And let me show you what the chairman has actually mentioned in their annual report. He's mentioned that major brands that he owned has actually extended their lead, just like the previous crisis, 2008-2009 global financial crisis. High quality products really had this intangible value and continue to drive sales. I guess LVMH really has this intangible portion to the brand itself. It's pretty much like why Warren Buffett buys Coke, because Coke has that brand value. It's going to be very long lasting. And with that, let me show you the chart of its 1-year performance. You realize that it's skyrocketed, correct? Right now trading at almost 400 billion in market cap. And it's actually significantly outperformed the French index. If you look at this, the brown line over the blue line. So if you like LV, buy the LVMH stock. Don't buy the LV bag because they're spending, but if you buy LVMH stock, you get rich. Number 2 on today's list is another company that I'm sure you are familiar with. You may be even using their products. This company is L'Oreal. Now, L'Oreal has seen performance of its operations suffer a bit simply because they distribute shampoos to salons, and if salons can't open, naturally sales have dwindled a little bit. But fun fact for you, do you know that L'Oreal is now trying to move sales online, and they are pretty successful in doing so? I think they're doing some virtual reality or augmented reality kind of testing of makeup and stuff. So I haven't tried it, that's why I can't give you more insights, but I'm pretty sure that L'Oreal knows what they're doing, simply because they have reported that online sales have jumped up tremendously in 2020, 62%, and in China alone, online sales has grew 56%. Now, China is a big market simply because there are so many women over there, and also there's increasing spending power. And if you look, Asia is again a big component, very similar to LVMH. Asia Pacific, 35%. And if the outlook for China is positive, income increases with women over there, you should expect L'Oreal's products to continue to sell well in the long term. So that's a very stable trend. You're not being disrupted by technology. This brand is just going to sell more and more in the coming years ahead. And that's what you want as an investor. Now let's look at operational numbers. You realize that it's been growing, correct? Very steadily. But in 2020, of course, that's an abnormality. But the main part is they've been tweaking their business, and the weight of online sales has increased. This is the number that I'd like to show you. 26.6% of sales have now moved to e-commerce. They can survive pandemic, Even if it comes again, I'm sure they are more than ready for it. So this is a good business if you're really concerned that COVID-19 is going to cause lockdowns again. Let me show you in terms of dividends also. You realize that it's been growing, correct, year on year. And we have a term for this in investing. It's called a dividend aristocrat. The year-on-year growth in dividend, very steady. If you are a growth plus dividend investor, L'Oreal definitely fits that equation itself. And let me show you the chart for its share price. Tremendous performance. Its market cap now has grown to $200 billion already. Not only that, L'Oreal sees a post-pandemic surge simply because that happened in 1920s. So they're very optimistic. There's a post-pandemic boost to things. There's a China growth to things. And if you're keen to buy L'Oreal shares, maybe I can share with you also. You can't go to a local brokerage or Tiger Brokers to buy L'Oreal and LVMH. They are listed in France. You can't really access them directly. That's why if you stay on to the rest of the video, I actually show you solutions on how you can get exposure to these two fantastic companies. With that, let's move on to the third name that I'd like to suggest to you, which you may not have heard before, but they are a giant in their niche. And before we get there, let me invite you to smash your like button because it's taken our team hours to prepare this presentation for you. And again, smash or subscribe, stay tuned for more good stuff. Now, this third name is actually ASML, a Holland-based company. And if you don't really know what they do, let me pull up this image for you to see. What in the world is that machine, you may be thinking? That is actually a photolithographic machine that is part of the chip making value chain. And chip making is actually, your semiconductor wafers that you use for smartphone and stuff. So just to illustrate to you how much they are dominating their niche, if you look at the things, you realize that they actually own more than 60% of market share, with the two others being Canon and Nikon. And because ASML's technology is so far ahead of its competitors, it's really been able to hold on this dominance for the last 10 years and moving ahead so. Their clients include the top names such as Intel, Samsung, TSMC. So all these big semicons do require their technology in order to construct their products. So fantastic, correct? So with that, let's understand the breakdown in terms of where their sales is coming from. Taiwan, of course, that's TSMC. South Korea, that's Samsung. And China is an increasing component of things because China is trying to manufacture a lot of their semicon in-house in China itself. They don't depend too much on external countries. So ASML's high-end products are being sold to Chinese chip makers, and it's become a political tool. So there's one risk. If US-China trade tensions spill over, it could affect sales by a bit. But also, other analysts are also highlighting that they have significant concentration risks. These are a few customers that are mainly consuming their high-end products. It's not for everybody. And when semiconductors reach an oversupply phase, then perhaps their sales might also start to peak and tail off also. But before we get too pessimistic, let me show you their sales for the last few years. Look at this chart over here. Fantastic, correct? You realize that from 2017 to 2020, it's been growing at a tremendous pace. And not only that, 2021 is going to be a record year. Fantastic performance. If you analyze that, that could easily be 17 billion euros. So the growth rate for ASML has really been tied to the semiconductor wave up. And the good part is they actually have very strong margins from their business. Let me show you some operational numbers. You realize that net income over net sales, that's margin, is actually at 30% thereabouts. And if you look at proper investment principles, good margins really reinforce the fact that they have an investment mode to things, a business competitive advantage that is long lasting. And that's actually translated to a very inflated share price. Let me pull up a summary that I managed to find over here. Because I was personally keen on buying ASML, it's actually listed on New York Stock Exchange. You realize that currently the price to sale is actually much higher than a 5-year average. Price to earnings also. Even the PEG ratio is also at an inflated level. So as I've always suggested on this channel, if you have identified a strong company, wait for a good time to get invested. Don't chong in simply because it has good operational numbers. Because right now it seems like it's at an inflated price. So food for thought on that. But if you want to get invested into ASML, there are a few other ways. Firstly, you can buy a technology fund such as this, Blackrock World Technology. You'll see ASML being a small holding of that. But when you buy a technology fund, you realize you get Apple, you get Amazon, you get Microsoft. You don't really get too much of ASML, and today I have solutions on how you can get invested in ASML, LV, as well as L'Oreal. So one stone kills 3 birds, correct? So with that, let's move on to number 4 and number 5 as an investment idea for this month. Now, do you realize something? There's a common denominator for these 3 excellent companies, and that they are all from Europe. Now, many YouTubers are talking about US stocks. Myself, I'm high on Singapore and Asian equity, but Europe actually has some very nice names. And they're not even, Nestle, Unilever, SAP. Companies that are also excellent, but these 3 companies, as you have seen in this tutorial, really are pandemic proof in a lot of ways. So to buy them individually, not many exchanges, not many brokerages have them, and that's why I'll be touching on funds, and in particular these 2 funds. Let's pull up European equity funds and compare them across each other. From a 2-year perspective, the top performing one is Blackrock European Fund. I'll be covering that as point number 4, and Threadneedle Pan-European ESG Equities, and I'll be sharing that idea as point number 5. So let's deep dive onto Blackrock European Fund first. Now take a look at this fund. It's actually a 4-star Morningstar rated fund size of more than $2 billion Sing dollar. So this has actually been a pretty popular fund, and that they've outperformed the benchmark for quite a bit. This is a key differentiator. You know the skill of the fund manager. So in terms of since launch performance, it's done more than 2% in extra to the benchmark. And if we look in terms of the last 1-year performance, it's done 53.24%, correct? Whereas the benchmark 35.32%. Top holdings for Blackrock's European Fund actually is ASML at 5.69% and LVMH actually is 5.03%. So again, top 2 names are the names that I've covered for today's tutorial. So again, if you like more information on how to invest in the funds, I'll be building up material in our private member channel. So look for the join and look for the investment members tier. So idea number 5 for this month is actually Threadneedle Pan-European ESG Equities. And let me show you its top holdings. This fund has ASML as its top holdings also at 4.6% weightage and LVMH at 3%. L'Oreal comes in at 2.4%. So this fund gives you all 3 that we've covered today in one shot. So I actually like this fund quite a bit. It's so difficult to buy French equities, so might as well get into a fund that can get you exposure in these 3 companies and let the fund manager allocate actively on what to buy more and what to buy less. So if we compare the charts between Threadneedle Pan-European ESG and Blackrock European Fund and MSCI Europe, how do they fare? I have this 3-year chart to show you. Fantastic outperformance, correct? The yellow line is Blackrock European Fund. The red line is Threadneedle Pan-European ESG Equities. So if you're keen, maybe these 2 funds could be a good idea for you. Leave your thoughts and comments in the sections below. Hopefully this presentation has inspired you to look beyond Singapore's shores to good companies all over the world and have your portfolio properly diversified. And if you have missed the previous tutorial on the best Chinese funds, check out this previous video I had. Over there, you'll find funds that invest into Tencent, Alibaba, and even Meituan. So with that, I'll sign off from here, inviting you to watch that video also. I'll see you there. Take care and goodbye.